Even though when you look at markets right now, everything looks good. You can see Bitcoin's at 70,500 and the S&P's are nearly at all-time highs. I'm coming to you with like relatively bad news today. And the bad news is that I think that there's a massive stock market and risk market correction, which is imminent. And I kind of feel weird bringing you this show today. And I'll tell you why I feel so weird bringing you the show specifically today, because today marks exactly 6 years since COVID was declared a pandemic. And the thing is, I don't know if you remember this day when Trump actually announced it as a pandemic.
To unleash the full power of the federal government in this effort today, I am officially declaring a national emergency. Two very big words. The action I am taking will open up access to up to 50...
Trump declared a national emergency, and the thing is, when COVID was... Why I feel weird about talking about this today is because when I look at the charts, this is when COVID was actually... when COVID actually began. And this is when the markets actually reacted, which was 56 days after the headlines. And so maybe the market's playing out exactly the same. In fact, today I'm going to show you data that kind of shows that this is exactly what may happen to stock markets. The stock markets are not reacting to exactly what's going on, right? The stock markets aren't reacting to the news, just like they didn't react to the COVID news over here. But there's something brewing under the scenes, and I want to show it to you because when you see it, you'll probably agree with me that we're about to get a stock market correction and a risk market correction. We'll talk about what that actually means for Bitcoin. So for those of you who are wondering why we are here so early today, we're here so early today because I have something to do a bit later today, and I just thought I'd drop the video before I actually go and do what I need to do. So we're here a bit earlier. Help me get distribution, please, because I am here a bit earlier and most of our friends don't know that. So all I need you guys to do to help is just smash a like button. That's it. Just hit like button once, and I'll show you exactly why I think that, unfortunately, and I say very unfortunately, there is a stock market correction which is imminent. Let's get into the alpha. Let's get into the data of the show. So I think just starting this off again, here we are. Trump is declaring that the US has won the war.
Well, it's only good if you win. You know, you can only do... And we've won. Let me say, we've won. You know, you never like to say too early you won. We won. We won the bet. In the first hour, it was over.
So Trump's telling us in the first hour the war was over and he's won the war. And they told us that they almost eliminated the new Iranian supreme leader. Well, I don't know. The Iranians are saying that he's going to deliver a speech within minutes. Now, remember that they have said before that the supreme leader will deliver a speech, and the speech never came, but we're on standby here just waiting to see if the speech actually comes. The oil price is also telling us that the war's not getting any better. In fact, yesterday when we were here, the oil price was somewhere around $80 a barrel, $84 a barrel. Now it is at $90 a barrel. Trump's telling us that everything's fine in the Strait of Hormuz. He says the Strait of Hormuz is in great shape. But when, I don't know, I mean, you listen to this.
Treasury Department buy oil futures as a means to keep the oil prices down or bring the oil prices down.
Well, we're going to be in very good shape. You see what's happening. They are pretty much at the end of the line. Doesn't mean we're going to end it immediately, but they've got no Navy, they've got no Air Force, they've got no anti-air traffic, anything. They have no systems of control. We're just riding free range over that country. And now we're going to look very strongly at the Straits. The Straits are in great shape. We've knocked out all of their boats.
So he says the Straits are in great shape. They've knocked out all the boats. But I don't know. This is the images that are coming out of the Straits. So clearly everything is not as it seems over there. And to make it worse, right now, what the Iranians are doing in the Straits is that they're actually mining them. So they are leaving mines in the Strait of Hormuz. The thing with the mines is that the mines are very, very, very simple, but yet very, very, very effective. They're saying the most dangerous weapon at sea is not a missile, a submarine, or an aircraft carrier. It's something you'll never see. Right now, they're at the center of attention because they're brutally cheap to deploy, hard to detect, and they stop billion-dollar ships in their tracks. And there's multiple different types of mines that Iran's mining in the Strait of Hormuz. So Trump tells us that the Strait is in good shape. Iran tells us, and the fires and the smoke tell us that the Straits aren't in good shape. And what you can see is that the market's starting to panic a little bit. And the reason how you know that the market's starting to panic a little bit is you look at Trump saying that the US will start releasing some of their oil reserves. And when they do release some of their oil reserves, that should bring the oil price down. And as soon as, I mean, this is what Trump said.
Give us a timeline on when you're planning to tap the Strategic Petroleum Reserve, a timeline of when that could happen.
We're going to be doing it very quickly, and then we'll fill it up. We'll fill up our reserves. You know, if you remember, I filled them up And then I had a deal to go at the highest level, a level that's never been, and Schumer and the Democrats for $25. And it was turned down. You remember that, Peter. Almost before your time, but not quite. But it was, we had a deal at $25. Think of that. $25 a barrel.
Okay, so,
and the
Trump's basically telling us, Trump here is basically telling us that that he's going to release oil. And what the market's basically saying is no, I don't believe you. And this is what happened to the oil chart as soon as Trump actually says this. And you can see that the one problem that the US have is that they don't really have as many oil reserves as they kind of want. They've got $400 million barrels of oil. The oil chart, there's no sound.
No, it's back.
Is there sound? No voice,
Back. I
mute.
just got it back.
Can you guys hear me? Thumbs up if you can hear me.
I can hear you again.
It says muted. Am I muted?
It's back now.
Rewind. Okay, so let me rewind. So I was saying they don't have strategic oil reserves because Biden depleted the strategic oil reserves, as you can see. And right now, the US only have $400 million barrels. Now, that's not a lot of oil. You'll remember that they were talking about releasing 400 million barrels the other day, and that was going to last like a couple of days in this war. And that's basically the problem. So, on the one hand, the US is telling us everything's fine. And on the other hand, when you put your money where your mouth is, the charts are telling you that everything is not fine. And specifically, the charts that I'm talking about are two charts. Obviously, the one is the oil chart. The oil chart actually spiked back to $96 a barrel. And the other chart that's telling you that everything is not fine is the US Treasury yield chart. Now, when I said the US T-bill chart, this is US debt, which is 30-year US debt. Now, generally, in a time of war, people run to safety or to safe havens. The safe havens are gold, and usually the safe havens are US dollars. And that is why generally you want to see the yield basically go down, right? In this case, the yield since the war started is basically going up, which kind of says instead of acting as a refuge, government bonds took their cue from surging crude prices and yield shot up with inflation fears, which is now this is the big problem that we actually have. Also, we're hearing that Iran's not really interested in a ceasefire, and they've been declining the ceasefire, even though Steve Witkoff, the US is trying to contact Iran for a ceasefire. Iran is refusing. Witkoff has already requested a ceasefire from Iran through various channels. Iran refused, seeing no point as the US is clearly using any ceasefire to better prepare its next attack on Iran. So everything doesn't seem to be fine in the Gulf, and in the Gulf, the Iranians are basically saying, Trump, you can do whatever you want. You won't be able to artificially lower the price of oil. They're telling us everything's fine, but things are telling us that there's an escalation. They mined the Strait of Hormuz. They're sending more rockets. There's a rocket that hit Dubai's Creek Tower. I don't know if you guys saw the footage of that earlier on today. It's not going as smoothly as they think. Now, let's talk about what the problem is, or the chart that's scaring me the most. The chart that's scaring me the most is this chart over here. This chart over here says every single time in history that the oil price has spiked, risk has crashed. It's simple. It's as simple as that. Every single time that the oil price has spiked, risk has crashed. Here's the chart. Here's a bigger chart version of that chart, and you can see the yellow line here is the oil price. Sorry, the cream line here, or this color. I don't even know what you call this color. Here we go. Number one, oil prices spike, risk crashes. Number two, oil prices spike, risk crashes. Number three, oil prices spike, risk crashes. Number four, oil prices spike, risk crashes. Every single time oil prices spike, risk has crashed. We've just had an oil price spike. The problem is that when you look at the markets, Bitcoin's at 70,400 and the S&P 500, yeah, well, it's come down a little bit, but that's not a correction. And that is this is now starting to worry me. Remember I showed you this chart at the beginning of the show? Remember I said to you that COVID was declared a pandemic, COVID was discovered over here, and only 60 days after that, it was declared a pandemic, and then that's when the markets collapsed. The same thing is happening here, and I'm giving you this warning right now. The same thing is happening again. The markets are not fully pricing in this disruption that's basically happening in the oil market. That's where the poison is, right? Here's the tweet that summarized it. Long oil here as it's mispriced. The Strait of Hormuz won't be opening anytime soon. Iran is already bombing ships trying to get through. They've already been several incidents. They're also laying mines in the Gulf, right? And that's not something that's going to go away tomorrow. They want oil to go as high as possible. At the same time, the IEA is releasing these barrels of oil. It shows that they're starting to release the impact, right? And so right now, I think that this tweet also it sums it up pretty well. It says, it took 6 weeks for the markets to realize there was a global pandemic despite non-stop reports. It took 6 weeks for the markets to buy Nvidia stock despite the grandiose and public demonstration of talking computers and AI. It'll take 6 weeks for the market to realize that the Strait of Hormuz is actually closed. That's the buzz line here, guys. That's the big thing here. Markets don't respond immediately. And right now, risk markets are holding on in a hope. They're holding on almost at all-time highs, and they're holding on in a hope that for some reason this thing is going to be over soon. And they're not pricing in the probabilities that this thing is not going to be over soon. But all the data is telling you that this thing is not going to be over soon. Everyone says Iran's getting weaker. Iran's not getting weaker. They are bombing more and more and more. They're bombing in Dubai more and more and more. They're disrupting more and more flights. The problem is that yesterday we had an inflation reading, and the inflation reading was great. I mean, we expected 2.4%. We got 2.4%, right? But here's the problem. As oil goes up and as oil stays up, we have a problem. Because for every $10 that oil actually goes up, here's a model, right? For every $10 that oil actually goes up, the inflation actually starts moving up with it, right? And it's not only about the inflation. It's the fact that you've got increasing inflation, which is now going to become inevitable, and you've got increasing unemployment because of AI. So you've got increasing inflation, it's inevitable. The price of oil goes up. When the price of oil goes up, there's going to be increasing inflation, and there is increasing unemployment, and that is a very bad thing. The Fed gets caught between a rock and a hard place. They can't reduce interest rates because then inflation will go up, and they can't cut interest rates. Sorry, they can't cut interest rates because then inflation will go up. They can't increase interest rates. They're basically caught between a rock and a hard place. And then the other thing is, if you think that this is going to be over very quickly, then I want you to think again. And the reason why I want you to think again is because this damage that is being caused to all the refineries, right? All this damage through all the bombings that we've seen being caused to all the refineries, how long do you think that's going to take to repair? And for as long as this damage isn't repaired, the price of oil will remain elevated. So you're talking about a long-term situation where the price of oil remains elevated. And so I think what's happening now is that the market is living in denial. The market is basically saying, oh, everything's fine, everything's fine, everything's fine. Everything's not fine. The Strait of Hormuz is almost closed. Oil is at $90 a barrel. There's been a lot of damage to oil infrastructure, and that damage is going to take a hell of a long time to fix. And whilst we're trying to fix that damage, the oil price is sitting at $90. When the oil price is at $90, inflation is going to go up. If inflation lands up going up, and the Fed has a big problem. The Fed can't cut interest rates. It's not only about oil, right? It's not only about oil. Fertilizer prices up. Every price is up. Here's an article that says repairs to Saudi Arabia oil facilities after devastating attack reportedly could take months. I.e., what they're saying is there will be less oil 4 months, and therefore oil prices will remain elevated 4 months. That's basically what this headline is telling you. But the markets are not pricing in this 4 months, which is quite weird. But remember, when COVID happened, the markets also didn't price it in. When AI happened, the markets also didn't price it in. They only priced it in 6 weeks later. I think Peter Brandt is right here. And he says, in case you've not noticed, we are reliving the 70s with interest rates heading higher and commodity prices blasting off. In the 70s, US equities rattled back and forth in the 50% range. Equities are overpriced now, but they won't be overpriced for long. He's basically warning us that right now, equities aren't pricing in the reality, and that's the problem. Remember this tweet from Ben Cowen? This tweet from Ben Cowen said, oil is up 60% post. He says, remember when oil prices when oil prices rises in the late business cycle, it marks the beginning of the end of the business cycle. So he's saying that if oil prices spike towards the end of the business cycle, it marks the beginning of the end of the business cycle. Let's talk about the beginning of the end of the business cycle. That's the S&P chart. If you take that S&P trend line, which has been going on since 2018, we are at the top of the business cycle. This is indicating that at some point we should get some kind of correction, at least back down to somewhere like that. That would mean the beginning of that. I mean, this is one business cycle. This is a second business cycle. This would mean that we're going into another one of these business cycles, right? And you can see it in some other chart indicators. You got a death cross on the weekly of the SPX. Every time you've had a death cross on the SPX weekly, you get these sharp declines. I mean, Polymarket's also pricing it in. You've also got every midterm year. So going back to 1926, the S&P 500 has seen an average drawdown of 18.2% in the 12 months before the midterm elections, going back 60 years. The smallest drawdown has been 7.4%. The largest was 41.8%. Basically, all the signs are posting to the same thing, and the same thing says that the markets basically start moving down. It doesn't make sense that we're in the midst of this war and risk markets are currently priced at, I'll price it for you exactly so that we can, currently priced at 4% from the all-time highs. Sorry guys, it doesn't make sense. So how do you position yourselves for this? To be honest, risk off. You want to be in cash now, you want to be risk off now, and you want to have dry powder to buy the market. How does Bitcoin fare in this whole thing? So, I mean, you can take the view that Bitcoin moves up while the rest of the stock market goes down because they haven't been correlated. I think if you did that, you'd be a little bit naive, right? I think you'd be quite a lot naive. I think if the stock market actually corrects, I think Bitcoin actually corrects with it, and that's where Ben Cowan basically says the same thing. He said, in bear markets, Bitcoin will spend more time going up than going down. The problem is when it does go down, it goes down very quickly, sets a low, and then trends back up for weeks before going lower. That's what I'm worried about. I'm worried about a stock market correction that takes Bitcoin down. Right now, Bitcoin's doing well. Everyone's like, oh, wow, Bitcoin's going for strength. But that's the trap in bear markets. Bitcoin will often spend more time going up than going down. When it does go down, it goes down very quickly, sets a low, and then trends back up for weeks before basically going even lower. Right now, for me, guys, I'm going risk off. I'm using my cash. I'm getting my cash ready to basically buy the dip when the dip actually comes. I think you can do the same. Remember, right now, the big trades are the trades on Blofin. You can trade oil. This is where everything's happening. You can trade it on leverage over here on Blofin. If you want to sign up and you want $1,000 free position on oil, here is if you want to sign up, link below. If you use this link, then let's add the link, and we'll also add a video for you guys of how to claim the $1,000. That's the first thing. The second thing is what I said to you guys yesterday. Every move right now is driven on headlines. Like very, very, very soon, the Iranian supreme leader is going to speak or not speak. Right? Let's just see. Maybe no. Okay. So he may or may not speak. If he does speak, the first place that the news will be served will be here in the terminal, because this terminal has an AI in the back which knows every single reliable news source, and it basically feeds that to you in milliseconds. And then once it does, you can basically trade from the terminal in milliseconds. So let's say that this was market moving news. Effectively, I'll click buy. That's it. I'm long. And if I want to short, I'll actually put the sound effects on for you guys. On. Okay, bang. Okay, you can see that. So that's the news terminal. And for you guys, it's free. It's basically free. So if you go here, the first month is free. You can cancel after the first month. Just go to this news terminal, download it, use it for free. Right now, headlines are moving the markets. You need to be able to trade the headlines. Yeah. All right, guys, I will see you guys again tomorrow. I didn't want to bring you such a negative show, but we've got to call a spade a spade. When we see the markets doing something we don't like, we have to call a spade a spade. So that's my prediction. I'm going to stick to it. I'll see you guys again tomorrow. Until then, trade well, my friend.